The issue of not being aware of the value of their land, it's not that they don't know, it's more that they don't care. A lot of times when we close these things, it's not really a money issue at all. People just are apathetic, especially if you think about somebody who inherited grandpa's 20 acres that grandpa bought years ago, and they get the land and they don't know what to do with it and they don't want it.
Welcome to Multiple Perspectives. I'm David Lofgren.
And I'm Daniel Brereton.
Daniel, I've been thinking about what happens when like a successful investment strategy stops working. Like particularly when it comes to the direct real estate investing stuff that we've seen for the last 15 or 20 years.
Okay, yeah.
There's like this this emergence of the sort of like fix and flip business models or wholesalers who built entire careers on these specific business strategies that were sort of predicated on inefficiencies in local real estate markets.
Right.
But at a certain point, I feel like these folks all realized that they could sort of diversify their income or maybe sort of like scale to a different level of income by teaching people how to do that thing that they were doing pretty successfully.
The courses, of course. Yeah, offering a course, of course, based on what you say is your success. Options traders, real estate traders, whatever, right?
Yeah, exactly. Yeah, you're just sort of saying, okay, I've done this thing, I've become successful, now I'm an expert in it, and I'll teach you how to do the same for whatever, $1,000. But I feel like there's this paradox in doing that, which is that by teaching a bunch of people about an inefficiency in a market, the inefficiency that you've based your business model on, the market becomes efficient. Does that make sense?
Yeah. You're an efficient market is a liquid market. So you're adding more people chasing the same number of these transactions and you're closing that inefficiency. And, I think about, a testament to that is when in the hedge fund industry, you got a hot trader who wants to jump to another firm. Sometimes they'll be put on garden leave, or whatever you want to call it. And in some industries, it's a couple days, it's a couple weeks, a couple months. In some of these hedge funds, it could be a year or more where they're just paid to do nothing because they don't want to expose that inefficiency to another fund.
Right. They're sort of carrying this secret that the fund doesn't want let out into the world. Yeah, so it's like, I've been thinking about this and just thinking like, what do you do when sort of the jig is up, so to speak? Like the inefficiency that you've been exploiting to make your money starts to dissipate or to disappear. And I don't know, that led me to this conversation that we're about to share with Seth Williams, he's the founder of REtipster. He's someone who achieved financial independence relatively early on in life, in his mid-30s, through something that we don't talk about that much in the context of Equity Multiple or the podcast. But I think you'll be interested to hear that he sort of found his fortune with land investing.
Right. Yeah. It's interesting though. You mentioned about these inefficiencies and like where to. Is the jig up? Is it all harvested? Like, is it exhausted, the market? Or is it real information, for some of these things, these courses? And are you just catching it at the right time, at the wrong time? So it's hard to evaluate where in the hype cycle or where in the reality cycle you are.
Yeah, and naturally, as we know, real estate is it's a local business at its core, right? If you're investing in a property, that property is in a place, and the dynamics of that specific market, sometimes that submarket, that neighborhood, that block can have its own sort of specific factors inefficiencies, exactly. So Seth has been doing this with land, and mostly. He hasn't even been developing the land. The inefficiency comes in recognizing that a lot of people are sitting on just sort of vacant lots that whatever they inherited or came as part of a different transaction, and that there was a lot of space in the market to identify what these lots were, go in, offer a good deal for them, and then take that and sell it to someone who has a more specific understanding of what they want to do with this thing, ideally at a higher price point.
Yeah, I mean, is this like sort of like Is this almost speculation on land, or some people might say, "Oh, you're just buying up land and just sitting on it," or is there an art to it, a science to it? I'm curious.
Yeah, well, we'll learn a little bit about that. Seth has been doing this for a long time. And I think like a lot of these sort of models, these direct investment models, a lot of it is about building a pipeline so that you just have a lot of opportunity coming in the door, and then you can vet which ones might give you the best returns. But Seth did something interesting because he noticed that essentially at a certain point in his career, he was approaching landowners and realized that they'd already had 10 offers. Like folks had figured out the game, and where he once was sort of working this relatively unknown niche, that now it's turned into a bit of a crowded market. The inefficiencies have disappeared. So he started actually developing the land that he was buying.
Took the other side of the trade.
Exactly. And actually has a pretty interesting story about the first time that he decided, okay, I have this piece of property. What if I decide to run my own self-storage facility, which it turns out he's still doing to this day.
Well, I'd be happy to, listen in and hear how your guys' conversation went. Let's see how it goes.
All right, here's my conversation with Seth Williams. Seth Williams, welcome to Multiple Perspectives.
Hey, great to be here, David. Thanks for having me.
You have a pretty interesting story. If I have it correct, I think you managed to achieve FIRE at 37, or at least that's when you decided you wanted to retire. And did that through a combination of just sort of being frugal, starting to engage with your personal finances, and investing a lot of your sort of discretionary income into like direct active real estate investments. Is that right?
Yeah. Yep. You got it. Yeah. I think it was 2016. I forget how old I was back then, but yeah, it's been about almost 10 years now, coming up on it.
Wow. And before you sort of got to that place of retiring and focusing exclusively on sort of your investing career and your real estate career, you had founded REtipster, your sort of, creative content publishing platform, right? Where you publish information about real estate and investing. You founded that before you even retired, right?
Yeah. It's funny. I guess you could use the word retire, but I don't like using that word because
Right.
that just seems really boring to me.
Right.
I think it's more of like being able to choose what I want to do for my work instead of having to do for somebody else. But I was a land investor and a content creator at the time when I pulled the plug. So I kind of had those two different things going at the same time.
Yeah. Emphasis on the independence, not necessarily on the retirement, right?
Yeah. Yep. Exactly.
Cool. You're someone who's like deep in the midst of this community of folks who are investing in real estate, trying to sort of, find some independence from the standard 9 to 5. And I'm wondering, right now we're sort of in a pretty chaotic time, economically speaking. Of course, real estate, especially for independent investors and for folks who are sort of working in the middle market, is a much more localized business than sort of, necessarily being hit by all of the waves of sort of macroeconomic news that we hear. But like, how do things feel for you right now? How do you feel like your community, the folks that you engage with who are actively engaged in real estate investing, like where do we stand as far as, how you're seeing things?
Yeah, that's a good question. I think a lot of us are struggling one way or another, whether or not we want to admit that. I say this about a few different camps. Land investors and then self-storage, that's a whole other thing. But just from what I've seen firsthand in both of those, it just seems kind of difficult. Like margins are getting squeezed, interest rates are high, which is making people buy and build less and move less, which affects a lot of things. And ultimately, both vacant land, buying a piece of land and self-storage, they're both luxury items. Like nobody really needs this stuff. They just do it if they have excess cash. I guess the rumblings I hear in my community is kind of a similar thing where a lot of people seem to be having a hard time, but they don't know if it's just them or if like everybody's feeling this. And it's a valid point of confusion because like I do hear from people who are still killing it and doing really well. So I don't want to say that everybody's hurting, but that's kind of just the mood I've sensed so far in 2025.
Right. And so much of success in real estate, especially if you're an active investor, depends on sort of the very specific dynamics of whatever the building that you happen to own or the property that you happen to invest in, what time, sort of what all of the various factors are as far as executing the business model. Do you feel like there's anything right now that feels like an upside or a place where people are sort of starting to look to go, oh, maybe this is the next play. Maybe if I'm reading where we are in the cycle, right, like this is sort of the place that I want to be headed, or I'm glad I did.
Yeah, I mean, I just thinking specifically about land investors. So the people who are struggling the most are the people who are following the same old business model that was taught and that everybody did like 5 to 10 years ago. There was a certain way that everybody did things, the way that people would find deals and, what kind of offers they would make and all this stuff. And those ways just aren't working as well anymore. There's more people in the business now. Properties are selling slower than they were for the past few years. So it's not that you can't succeed at it, but if you do what everybody's been doing for so long and just stick to that, and if you're unwilling to change and think outside the box and try new things, that's when you're going to struggle. People that are still doing well are people who are able to do creative closing techniques like double closings and assignments and make higher offers, and they're willing to develop their land. Whereas land flippers of the days past would never do that. They would just buy it and do nothing and sell it. So I think the business has gotten more challenging, but the people who are willing to embrace those challenges are doing fine, really.
I want to get into this. Land investing is something that you have a lot of experience in. And I think it's something that's still sort of, for a lot of folks who are starting to get into real estate investing or who maybe have sort of stuck to the middle, the core 4 asset classes, it feels like it's a bit niche or a bit sort of outside of the normal path. I wonder if if you can first just sort of explain on a basic level what landing investing is, like what the boundaries of that are. And then I'm wondering if maybe what we can do is sort of talk about like historically what was working and now how you're seeing investors sort of shift. So we'll go definition, history, future. How's that?
So historically, land investing basically meant land flipping. And land flipping is where you find a piece of land with a motivated seller, somebody who bought it maybe 10 or 20 years ago, or they inherited it. And for whatever reason, they don't want it. They don't care about it. They're apathetic. And they're so apathetic about it that they're not even going to list it for sale. So if you don't find them and make them a low offer, it will never sell. It might just go to tax foreclosure. Maybe they'll just sit on it for 20 more years. But that seller is there and they're willing, but they need somebody to make it really easy for them. And so that's what land flippers do. They go out and they send direct mail or send cold text messages or something to find these landowners and they start making them low cash offers. And for a long time, this worked really well. It still does work, but it's working less because there's a lot more people doing it today than there were 5 or 10 years ago.
Right. The benefit in this business model is sort of finding the inefficiencies in the market, right? Finding the places where someone doesn't understand the value of their land, or maybe they're just not motivated and that, they haven't taken the time to do the research. You're going to come in and say, listen, I'll take it off your hands. I'll give you what feels like a good deal to you. It feels like a great deal to me. And the business model here is like, it's a pretty quick exit, right? You're buying it, you make your money on the buy. It's like a great basis play. And then it's just, you flip it and you move on. Is that right?
Yeah. I mean, the only thing I might change about that is the issue of not being aware of the value of their land. It's not that they don't know, it's more that they don't care. A lot of times when we close these things, it's not really a money issue at all. People just are apathetic, especially if you think about somebody who inherited grandpa's 20 acres that grandpa bought years ago, and they get the land and they don't know what to do with it and they don't want it. Again, there's that apathy factor there. So it's not like we're hiding what the thing is worth. We're just saying, hey, look, I'm a land flipper. I wholesale land. If you want me to make this really easy and close within 7 days for cash, this is the offer. And a lot of people say no, but some people say yes. And, and years ago, I mean, I could make offers like 10 to 30% of market value, like really cheap stuff. And people would happily say yes. Like, it wasn't like I was tricking them. It's just like, yes, let's do it. I'd rather have the cash than nothing. And nowadays, because there's a lot of other people doing it, and also, people just have a higher perceived value of what their property is worth. And if they're getting 5 letters a week from other land flippers offering similar stuff, they're like, maybe I don't need to sell this for 30% of market value. Maybe I should get 50 or 60 or 70. And so those margins get squeezed thinner and thinner. It just makes it harder for land investors or land flippers to do what they're trying to do. And so as a result, the way to create bigger margins and create more value is to not just flip the land, but buy it and develop it, or maybe subdivide it, or get the land entitlements, or just clean the thing up, do something to make it worth more. And it makes things more complicated, but for those who are actually willing to do that, they're able to continue finding opportunities. It's the people that just wanted to flip and do nothing, they're having a harder time.
Sure. So when you first got into this sort of land flipping business, just talk to me about like what the process was like when you're talking to these people. What's it's interesting to me that you're saying now there's a lot more competition in the market, right? The inefficiencies don't exist as much. So really the angle was that you were doing something that a lot of people weren't in yet, right? There weren't a bunch of flippers trying to figure out how to fill their funnel, as they say. We hear about this in the sort of the house rehab and the house flipping world as well. People turn into very savvy marketers and very sort of savvy discoverers of these opportunities in the market. So talk to me about what it was like when you were first starting out.
Well, when I first got started, I would get what's called the delinquent tax list, which is a list that every county has of all the properties that have not been seized in tax foreclosure, but they're about to be. So they're still owned by the private owners. I would send postcards to these people and say, hey, I'm looking to buy land in your county. If you want to sell it, give me a call. And that's all it was. They would call me back. I would have a pre-recorded voicemail greeting. They would leave a voicemail. I'd call them back. We'd do a deal. And you can still do that. The response rates have just plummeted. It's a lot lower than it used to be. And also the cost of postage is a lot higher. So like you really got to do it right. You can't just mess around and do it a horrible job and still find easy success like you used to be able to do. Yeah, I mean, I would go after really very inexpensive parcels of land, mostly because I didn't have a whole lot of money when I was starting out. So, I would buy properties to the tune of $100 to $1,000 and then sell them to the tune of $1,000 to $10,000. So like, that's the kind of numbers I was working with. And that was enough that I didn't need to take out loans or anything like that. And I could close the deals myself. And it was pretty straightforward and an awesome way to make money. Yeah. So that's kind of how it started. And then moving forward, now it's basically larger versions of that. And I'm also funding deals for other land investors. So like they find the deal, I provide the cash, we close on the thing, and then we come up with a way to split the profits when it's all said and done.
And like you said, now sort of this business play has shifted, or this business model has shifted to folks doing more sort of development, sort of becoming more like a traditional sort of real estate investor, where you're saying, okay, we're going to buy the land, we're going to do a grind up development, or we're going to subdivide it. The business model gets more complex, right? So tell me about, from what I understand, a few years ago, you started by actually building, like doing a ground up self-storage facility, right, on a piece of land?
That's one example of how you could take land and do something with it, is like do a full-scale development like that. But yeah, I just found a piece of raw land, had nothing on it, and I went through the year-long process of changing the zoning and getting entitlements, and we built a self-storage facility on it, and I still own it to this day, and it's been awesome. It was a pretty long project, took a lot of money to do. That's the thing. When you start getting into more complex projects like that, you really spend a lot of time just analyzing the deal, making sure you understand the numbers and being pretty confident about what you're doing. Because you don't want to spend $500,000 and get a $2 million loan, and then it's like, oops, I missed a little decimal somewhere. Sorry. So yeah.
Right. Yeah, when you're getting into those kind of projects, I mean, I imagine when you're first doing it, there's a huge learning curve, right? There's like a lot of these things that you don't quite realize are questions that you need to start asking. And I'm wondering like how you sort of model or diligence a deal like this if you're getting into it. Like, are you actually going through and trying to crunch as many numbers as you can before you break ground, before you even buy the land? Like, what's the sort of thought process that goes in before you go, okay, now I'm as confident as I feel like I can be to start this project?
Yeah, great question. So I had spent a bit of time trying to understand, like, what is the due diligence process when you're either buying an existing storage facility or building a new one? It's actually a bit simpler when you're buying an existing one because everything is sort of known. Like, what the costs are. It's right there. It's not like construction where it's like, I don't know, maybe this will change by a couple $100 grand the next month.
Materials cost 6 months from now, right?
Yeah, exactly. It was first a matter of understanding supply and demand and just understanding, is there actually a need for this right here? Like, how many other facilities are there and how full are they and what are they charging for rent? And am I able to create a new type of storage, like maybe a different size unit or maybe climate controlled versus not? Just am I able to bring something new to the market that people actually want? Through a few hours of doing this work on my own, I was able to figure out, I think this would work here. And the next step was I ordered a feasibility study. And this is where I paid somebody almost $7,000 to go and do a lot of the same work I already did, but they went even deeper and they confirmed, yes, I also think this is a good idea. And that's really valuable because I got my own biases and blind spots, and I might just not see something. but this person has no real reason to tell me yes unless it's true. So that feasibility study confirmed it was good to go. I got a general contractor involved, a couple consultants that helped me through it, and got bank financing. And it took probably 3 or 4 months longer than it needed to, just because I didn't really thoroughly understand which steps needed to happen first and which things you should be doing simultaneously. So I wasted some time, but it was quite the adventure, though. I mean, it was fun to create something from nothing like that. It's a bit different than a normal land deal where you're kind of just shuffling deeds around.
When you're doing that feasibility study, are they actually assessing like the market need for the product that you're going to offer? Is this more just sort of like, can you build this type of building on this type of land thing?
It's kind of all the above. They assess the market, and that was a big part of what I had already done. But basically just finding all the facilities, figuring out how full they were, what the pricing was. And then they actually like put together their estimated construction costs. Like, if you build this, Seth, we think it's going to cost you this much to do it. And they even had like a 5-year pro forma to be like, if you do all this stuff, we think you're going to make this much in year 1 and year 2 and year 3. And the interesting thing was, when I had this feasibility study done, it was in like mid 2021, and the market was just red hot for self-storage at that point. And so we made the decision to do it based on that, what it said at that point in time. By the time we finished this in mid 2023, the market had slowed down a lot. And that's one of the big risks of developing anything, is that it takes time to do this stuff, and the market can change before you actually get the thing to the market and start serving people. And that happened with us. Luckily, it didn't slow down, horribly. But like, for example, that feasibility study originally said that we would lease up within like 9 months, like be full in 9 months, which is crazy fast. Like, that never happens with self-storage.
How many units did you build?
170 like drive-up units with roll-up doors, and then 68 parking spots for RVs and boats. As things have panned out, it's more like a 2 to 3 year process to fill up, which is actually pretty normal. But it's you just want to be really careful and factor in things not going the way that you think they will, in the wrong direction.
Right. Yeah, I can imagine in 2021, I mean, you're in the like a year and a half into a global pandemic. You're talking about the biggest, black swan event in our lifetimes. It was probably trying to do any kind of projection is like, I don't know,
Yeah.
Wow.
Yeah, it was a weird time for sure.
What's happened since then? I mean, is this still sort of self-storage and this sort of development of land? Is this the kind of thing that you're sort of focusing on moving forward?
I think it is where I want my preferred future to be, or at least more in that realm, because self-storage offers a few key things that land does not. One of them being, a lot of depreciation write-offs, and also it's a source of income that is not totally passive, but it's not terribly difficult to manage one of these things, and the income is permanent as long as I own it. Whereas with land, it's either one big injection of cash, or if you sell a finance and sell the thing, you might get cash flow for like 5 years, but then it ends. So my next step at this point is to try to buy an existing one. I'm actually in the process of trying to do that right now. And it's interesting. The market seems to have slowed down definitely from how it was a few years ago, but people still want kind of crazy numbers for their facilities, stuff that it's not worth it, and yet they're asking for it. So I don't know. There's not a ton of desperate sellers out there.
Yeah, I mean, self-storage seems like such an interesting niche in the market. It's something that we've offered a few investments on through our platform. And, it seems like it's hard to understand maybe what the sort of, if you're going to start acquiring several of these types of properties, what the best exit strategy is outside of maybe like rolling them up. And like, do you sort of look at that as this as purely sort of a cash flow play where you just want to invest and then hold and just try and maintain cash flow? Or do you sort of see some sort of future where you're going, okay, I buy 1, I buy 2, I buy 3. Now all of a sudden there are some efficiencies that come from scale. Maybe I can roll this up to a more institutional investor or something?
Yeah, it's a great question. I think that's wise to do it that way, is to be thinking of what's going to happen when I sell this thing someday? Who am I going to sell it to? Why would they want to buy it? I actually don't do a great job of thinking through that. I'm more of this is a cash flow play. But interestingly, a lot of people I know, it's more of almost going to flip this thing. We're going to buy this thing, fill it up, raise the prices, and then sell it. And that's fine too. That's a way to get paid a lot faster. But I'm more just like the long-term cash flow.
So they're just running it like a mark-to-market, just like you would sort of a value-add multifamily deal.
Yeah, kind of. Although that life cycle of how long it takes to flip it, it might take a year, to fill the thing up. But they're not really in it for the passive nature of it. It's more of just, I want a huge payday. and get as fast as I can. And in terms of who I would sell to, I think to your point, once you have like 3 or 4 or 5 of them, that's when you can start getting larger institutional buyers interested because you've got a big package of them. I don't have that many yet, but maybe someday.
Is this the kind of thing that, like, when you're talking to folks who are interested in getting into real estate and, trying to figure out sort of where they'll carve out their niche, is this the kind of thing that it seems like a lot of people are interested in, or do you feel like you're in a sort of a specific niche that a lot of people are maybe wary of getting into because it does have such a, I don't know, sort of idiosyncratic market dynamics?
Whenever I talk to people about this, a lot of times people are like, oh, that's such a great idea. I've wanted to do that for years. I'm going to do that too someday. So there seems to be a lot of interest in it. A lot of people see the novelty of the idea of just having these units that sit there and people pay for them. But like 98% of those people won't do it. It's more just like, oh, that's a brilliant idea. I'm not actually going to do that. And the reality is, like, and I found this too, once I really started digging into it, I realized this actually isn't that easy of a business. It's not that simple. I mean, it may be simpler than some things, but like, there's definitely complexities to it. And if you're not up for the challenge of figuring those things out, you probably shouldn't be in this. So whenever people say, yeah, I'm going to go do it, I'm just like, good luck, man. Hope it goes well for you.
Right. Yeah. It seems like there some of the other niches that come to mind are like car washes. A lot of people sort of decide they're going to get into that. Or, I mean, even you talk to people who like have made fortunes on coin laundry, they just sort of like develop these, but every one of them, to the last, there's always this eventual realization of like, oh man, this is just as complex as any of the other potential, businesses that you're going to try and get into. Once you get into the weeds and once you really try and start to find the efficiencies, right? You have a ton of experience in like actively managed direct real estate investing. Do you ever dabble in the sort of passive or sort of more, crowd-funded types of real estate investing? Obviously, I work for Equity Multiple. This is our bread and butter, but I'm curious if someone with as much experience as you still finds any reason to sort of diversify through that sort of, other method of investing into real estate.
Yeah, I have a little bit in the past, but it's never been like a major portion of my portfolio. So, but a little bit.
You ever worry that like sort of these direct investments that the sort of diversification aspect isn't sort of being possible if you're putting so much capital into each of these bigger projects?
I guess it depends at what point are you diversified enough? Or theoretically, like, how far are you supposed to go? I guess if we're talking strictly about retirement, so I've got like land deals, I've got the self-storage thing, I've got my own solo 401k self-directed thing. I got a lot of money in that too. And I've also got a lot of stuff I've created, just like online content that produces passive income too. It won't last forever, but there's that coming in. So it's not, and those things are mostly disconnected from each other. Like it's not like one of them tanking will affect the other one necessarily. Could I diversify more? Probably. But I think to some extent, it's just, I think I've found the things that I really like a lot and I understand, and also to the point, like the solo 401k thing, like I've lost basically all control at that point. I'm just trusting somebody to manage that money and be like, man, I hope you do a good job. You got a good track record, so it'll probably be fine. But I guess having that in the mix, I like how it's like disconnected, but I don't like how I can't really make any decisions about what's done with that money.
Yeah, it's nice to feel like you have some control when you're putting money in a place that you're hoping it's going to pay off, and it's always a little scary when it's like, oh, okay, we'll see what happens. I'm wondering, just as we wrap up here, we sort of started with this idea that we're in a pretty strange time economically, and you're still in this place where you're helping a lot of folks realize financial independence and gain access to commercial real estate investing and some of these sort of more niche real estate investing plays. I wonder, like, given all of the tumult in the economy right now, are there any sort of like specific, I don't know, investment structures or strategies or anything that you're starting to point people towards or recommend, or maybe looking into yourself that looks like a good place for the future?
Yeah, when you say structures or strategies, is there any kind of example you have in mind?
Imagine that through REtipster, you guys are talking about all kinds of different investing, potentials, real estate investing strategies. And, a lot of people sort of when they get into real estate, they think, okay, I'm just going to become an LP and I'm just going to like invest into equity slices of these deals. Obviously, in the last maybe call it 5 years, 4 years, a lot of people start talking about like, well, debt or hard money lending, or like there are these other places you can start to get into where you can have your money work for you in ways that, might be a little bit more stable or strategic, given the fact that, we're in this sort of high interest rate environment. I feel like there are so many different ways to get into real estate, be it through the structure you're investing into, or maybe just through the sort of, if you're a more direct or active investor, the actual business strategy you're trying to effectuate. Like, is there anything that's emerging for you that feels like, this might be a good play given where I'm seeing things right now?
Yeah, I mean, something I have been doing a lot over the past 12 months-ish is basically just funding other people's land deals, which is kind of unusual. It's actually a newer thing. Nobody ever used to do this, but as the land flipping business has gotten more efficient, one of the big issues with investing in land is the financing aspect of it. A lot of banks out there want nothing to do with financing vacant land. It just doesn't compute for them. They don't get it. But that doesn't mean it's a bad deal. You just need a lender who gets it and understands that industry. So there's a lot of land funders out there, like myself and many others, who will say, hey, land flipper, you go out and find the deal. So you do all that work. There's a lot of work tied up in that. But you don't have to put any of your own money into it. Bring it to me. I'll fund the whole thing. I'll hold the title. When this thing finally sells, we'll either split the profits 50-50, or we'll do some kind of 60-40 or 70-30 split, depending on who did what work in the deal. And it's a great way to, play in the land game without having to do the most time-consuming aspect, which is the finding of the deals in the first place. And also for the land operator, the person that finds the deal, it's great for them, because otherwise, they could never do it either, because they don't have the money to take a deal down. So it's a good partnership opportunity. And it's the kind of thing where there are people who fund deals who know nothing about the land business. They just have a lot of money and want to do that. And that's fine. But I think it makes a lot more sense for somebody who has been a land flipper, because they really get a lot of the oddities of the land business.
Right. And it sounds like, as you were saying, when you started out flipping land, you're doing it for relative pennies on the dollar. You were able to find these deals and invest small amounts of money. But as you've sort of built your wealth and your experience, maybe this is a method for you to scale into land flipping, right? That you can sort of be on the money side and say, I understand that it takes so much time to find these deals and to do all of the work to make them happen. I'll let you guys do that. And yeah, that's really interesting. Fascinating. Well, Seth, I've learned a ton of this conversation. I'm sure our audience has too. I really appreciate your time. Thanks so much.
Cool. Yeah, thanks for having me on.
All right, that's our conversation with Seth Williams. Daniel, I'm curious if anything stood out to you.
Yeah, it's funny. The whole story, it's a nice arc going from, one side of the business to the other. And really what stood out to me is, he had the maybe forethought, or at least the constitution to decide to change his business model. What Emerson said is about foolish consistency. So, he didn't decide to just say, no, land is land is land is land. He said, all right, the market's changing. I need to shift my strategy to adapt to the market. And he didn't adapt to the market by selling a course. He adapted his market by, trying to add value to these properties instead of just speculating on land or, having a good sense for it. He developed himself as he developed properties.
Yeah. It's fascinating to see the folks who are out there sort of taking the challenges of an ever evolving market and adapting in a way that feels like we can learn some lessons about how we ourselves need to adapt as changes come.
Yeah, and I think the other thing is, if you're just a one-trick pony or just a one type of investor, you just stick to stocks or you just stick to one thing that you might stay in your safety zone, but you're going to miss out on a lot of opportunities. And, if you're not willing to take the risk yourself or, find it to be too much work to change, or you do just want to stay in your specialty. And it doesn't just have to be about being a land guy or a land investor. It doesn't just have to be about a real estate adjacent property. If you're just a person who's, a really good accountant or a really good lawyer, a really good doctor, busy professional, but you want to branch out to these areas where that there's value, real estate, investing, whatever, you don't just have to be alone. You don't have to do it alone. And you don't have to learn all that. It's a lot of work, and you don't just have to do it alone.
That's what you're here for, right?
Yeah. Well, enough conversations with people about that.
Speaking of conversations, if you, the listener, has found this conversation useful, please, by all means, share it with someone who you think might benefit from it. I think Seth's perspective on market adaptation and creative financing are, they're interesting things and at least worth starting a conversation around. It feels like sometimes, the most valuable insights come from people who've lived through those, like multiple cycles of success and failure, and learned to sort of adjust their approach accordingly.
Yeah. And, if you like this podcast, like this conversation, again, share it with a friend, pass it along. Thanks for joining us on Multiple Perspectives, and we'll catch you next time.